Hi, I'm Mikayla Stewart. I am the CTO and co-founder of Athena Collective, and today on For Female Founders, we're actually joined by a lovely guest and partner for Athena Collective, which is Emma from Wayflyer. Emma, do you want to give us a quick intro on yourself?
Yeah, happy to. And thanks for having me. I'm really excited to be here. So I am a product manager at Wayflyer. Particularly, I'm working on our embedded finance products, which is why we work together. And I have been a Wayflyer for about a year. Before that, my career has taken a winding path like many. I spent the first 7 years of my career in finance, working for a bank and as a corporate trader. So I think when we jump into some of the stuff today, I'll be maybe putting my finance hat on. And then the last couple of years, I've spent in tech in various roles from chief of staff to product manager. So really love being in and around tech. And yeah, I'm really excited to be partnering with you at Athena Collective and also to be here today.
So exciting. Yeah, of course. Thank you for joining. So this, I think, is going to be a really fun episode where we kind of dive into how non-dilutive capital versus kind of the traditional things that everyone's always talking about when it comes to funding companies. And especially when we're working with female founders, like you don't necessarily get the same access to funding and people don't always know about the alternatives,
Yeah.
which is why I kind of love Wayflyer for that, honestly.
With Awin's marketing technology platform, you can easily discover the best partners who connect you with huge audiences of new customers. Understand how your partnerships are performing with intuitive reporting and only pay for the results you need. Start today and grow your own way with Awin.
Well, I'm excited too. I mean, I love working there. So it's just really cool what we get to do and kind of just seeing the impact on customers. So I share your
Perfect.
enthusiasm.
So let's talk about kind of what Wayflyer and Athena are both working towards, that kind of shared mission that we all have. Basically, we're both trying to solve the same problem,
Yeah.
helping female founders really grow, scale their businesses in ways that allow them that ownership and control, right? We're putting
Exactly.
founders back in the seat of ownership. What is it about kind of the funding gap that makes you want to dive into these pieces? What about this problem really excites you?
Yeah. I think there's a bunch of things. I guess if I go way, way back, so my mom was a small business owner. She owned a video store in Los Angeles, which is still around. Plug for Vidiots if you ever want to check it out. But it's something that when I talked to her about her journey as a founder, right, and her co-founder was also a woman, and they were starting the business in the 80s. They went to go get a loan from a bank, and the bank manager said to them, "Go ask your father," because that was the 80s, and that was if you're a woman and you're starting a business, that is your experience. And so, like, just growing up, seeing my mom in those situations, obviously, I wasn't there for that conversation, but just hearing from her the kind of trials and tribulations of running a business, I think it's a journey that a lot of other founders and female founders, in particular, can really resonate with. So, kind of, I've always known about that her story of trying to get funding for her business. And also, when I was working at Goldman for kind of many years, I spent some time in angel investing in female founders and got to really see up close and personal sort of like the challenges they were facing and getting financing and how it might have how it was different from their male counterparts. So I think I just have seen it from a couple of different angles, this experience. And, for every founder, it's make or break being able to get funding, early stages to help you grow. And even for those in later stages, it can be the difference between sort of stagnating and really accelerating. So I think just to kind of summarize, I'm really passionate about this space because, you can have a great idea and you can know how to execute, but without capital, it doesn't always add up. And so just seeing sort of what kind of legacy banks and how they've maybe not been the most helpful for female founders, and then kind of the likes of Wayflyer now, where when you have these fintechs and they have a different approach, you get sort of levels the playing field, I think, in terms of accessing financing, which is what gets me really excited about the mission.
A great big thank you to our sponsors, PartnerStack. PartnerStack's ecosystem connects you to the world's largest B2B network for you to earn, connect, and grow.
Do you think that like non-dilutive capital and like these alternative funding measures are like gaining more traction recently because of like how hard VC is and like the banks in
Yeah.
such weird positions these days?
Yeah, I mean, I think my hunch, obviously not as an expert, but since 2022, where we've seen like more of a contraction, and sort of the focus of VCs has changed necessarily from like growth at all costs, right, to profitability, and that's become much more of a thing people are looking for, unless you're AI, because then you don't have to worry about profitability. But generally speaking, I think that's definitely the case, and I think a lot of times once those founders get to that point of profitability or close to profitability, where they can demonstrate sort of a path towards it, they have multiple options at that stage, because you don't just have to take equity, because it's the same sort of thing that other types of financing providers would be looking for, right? I think equity serves a really good purpose for founders in very different situations. So I think, if you're taking on a ton of risk, if there's going to be a huge return on that investment, like equity is really a great time for that. But if it's a cash flow problem, if it's just like, your working capital, or your operational cash that you're trying to plug a gap, or if it's more of a known quantity and you know what the return is going to be on that investment, like that's a really great place to look at debt financing or other like revenue-based funding that can plug the gap. So I think it does really depend, but obviously the landscape in venture capital has changed a lot in terms of the priorities of those investors and what they're willing to fund.
Do you think the education surrounding non-dilutive has really increased recently?
I definitely think there's more visibility around it, right? It is a little bit, I think oftentimes we think of it as like a really complex product, or, equity is, there's just more awareness around it. So I definitely think there's a lot more that we need to do on that front. I guess people might be familiar of, their, mortgages are the closest thing that like the average consumer would know about. So if you're new to starting a business, like how debt works for a business might not be immediately obvious, right? And like what structures there are, and like I said, when to use it and when not to use it. And I think it's important to kind of, approach it with that type of attitude.
And how do you think that impacts like kind of women in tech and for female founders to like hold on to all this equity? Like, where do you see that going?
Obviously, like if you can hold on to more equity and you can maintain more control, like it can be a better outcome for you. You can choose how you want like to then reward your employees, and how just generally making decisions down the line. Like I think obviously I definitely think there's definitely a place for equity, right? Like Wayflyer is a VC backed business, and I think that has helped us. And if you talk to our CEO, like that was kind of game changing, because it was at a time where we needed to take a lot of risk and we needed to make a lot of investment in the business, and we probably wouldn't have been eligible for sort of a product like Wayflyer provides today. So it really, I think, depends on the stage and just how mature the business is. But I'd hope that now that there's a little bit more awareness out there, and with Athena Collective, if we can bring more awareness to it, that people who might not have known that this existed or that they might be eligible for it, the goal is to really bring that to them. Don't make it so hard for them to search out and learn about, but really bring that opportunity to them, because they have 1,000 things on their plate, and I don't think they want financing to be the number one thing that they spend their time on.
I actually really love that you point out that like you guys wouldn't have been eligible for your own product.
I mean, I don't know. I just made that up, but probably not, because there's that really early stage thing where you're shooting for the stars, and with a lot of the kind of things that we look to really help those growing brands that have sort of started to figure out how to operate efficiently, right? Like that is important, because our product is when you give away equity, it's expensive, right? So if you think about it, you give away 10%, and then you go, I don't know, I wrote down some numbers because I was trying to like think about how to, for those that aren't that familiar with these topics, I think it's helpful to say numbers. So like if you give up 10% of your company today for 500K, right? And then if your company is worth 50 million exit, that 10% costs you 5 million, right? The inverse is if you've taken a 500,000 revenue-based loan, right? And let's say that's at a 10% fee, that's only costing you 50,000, right? So it's expensive, but it's expensive for a reason, right? They're not looking for your company to be at a stage where you necessarily are fully efficient and you figured out your acquisition cost relative to the lifetime value of customers and all those sorts of things that come at a later stage. So I'm sure in the early days at Wayflyer, like when we were still building, like you're selling a vision, right? That's when equity, and especially at the seed or pre-seed stage, like a lot of investors are investing, particularly in the past, without that assurance of what the outcome will be, and they get that. Debt financing is different. Like it's supposed to be a little bit more predictable, because all you're really paying is that fixed fee, right? So it costs you less, and it needs to be a little bit lower risk overall from the company's perspective, if that makes sense.
No, I love that. I honestly think that like there's so many different funding opportunities available, and there's so many different ways to grow your company that are just almost hidden. And so it's so interesting being able to hear that difference.
And people use a lot of jargon too. I feel like, sorry to interrupt, I was saying, like jargon is another thing, is that people will not necessarily like want to engage with it because of all these the terms that are being used and overcomplicating what is really just a simple product.
Yeah, no, absolutely. Love that. So how do you find that how we're tying Wayflyer into Athena is able to kind of increase your guys' exposure in those pieces?
I think what's been really great is like what we've been talking about is how do we bring more education around the product, right? So that people are coming in with some understanding of like what's the terminology we're using, why are we using it, and we're trying to just build more of an ecosystem and understanding around the product, I think, which will help us make sure it's right for the companies that we're speaking to, and so that they feel a little bit more engaged and that they're coming to the table with a better understanding of what it is we do or what we can do. So I think that is why these partnerships are so interesting and important. And you've obviously built a lot of trust with the customers within the Athena Collective. And so we're really kind of getting to piggyback on that and hopefully be a partner to them as well, because, we have that relationship.
Yeah, the piece I really love about like how we've managed to tie Wayflyer into our product is the accountability aspect of like when you're tracking your revenue,
Yeah.
what it actually means for your funding options down the line, because there's benchmarks of when you cross certain points that you're now eligible for options that you might not have heard of before. I
Exactly.
really love being able to tie those pieces together.
Exactly. And I think that's really useful for people. So just to give an example, like really one of our bare minimums for our product is that you're sort of demonstrating that you can make $10,000 or equivalent in other currencies a month in revenue. And so like in your platform, like people set goals around revenue. And then when they hit those thresholds, they should hopefully be, fall into that eligibility criteria then and start to see opportunities for kind of pre-qualified offers. And I think it is also nice to know, like, you've been doing all this hard work on your business, you hit this threshold, right? And then once you're over this threshold, you also have these more opportunities to grow, which can be less of a grind and just to kind of get the capital you need more quickly. So exactly, like having those growth targets that I know you've got in your platform, and also just sort of like general revenue goals being more visible and being tied to financing. I think that's an exciting prospect for people.
Yeah, I'm really excited to, as we continue to grow out this partnership, figure out how we can go. Great, so you've qualified for all this with Wayflyer. What are you going to do with it? Like, what are your options now? And like help surfacing that up for people to really understand why you would go down this road. Because I feel like some people are like, well, maybe I don't need financing now. Like maybe I'm at a point where I'm okay, but encouraging that growth and having targets around it, I think it'll be really cool.
Yeah, and like sharing customer stories. Like we have amazing ones on our website, but just trying to surface the like relevant ones, right? That of customers that have used financing and what have they used it for, right? And just seeing if that sparks ideas for people. I think what is so great with our product is like there's no the use of funds are not restricted. So, if you want to use them on marketing, go use them on marketing. If you want to use them on hiring, go using them on hiring, right? There's no actual restrictions, but it's also helpful, I think, for people to see how have other businesses use this capital to grow efficiently. Like what has been the game changer for them? And, a lot of times what we see is we see customers coming to us when they hit this sort of inflection point where there's a new opportunity on the horizon, but it requires capital. So, in the e-commerce space, a lot of times that looks like you've just got stocked in Target, right? So you've been selling D2C for a long time, and now you've got this massive order to fill, and you don't have the money to like buy the inventory, right? That's specific to more like physical goods, but there are sort of there's relevant stories across all of our customer base of similar problems that they're solving with the capital that I think could help people better understand, why might they take it and how they might use it.
I love the storytelling piece. I didn't know you guys had that. That's so fun.
It's so fun. When I was actually, before I joined Wayflyer, like it was one of the things that really hooked me on the business was like watching all these customer stories and just seeing like these really incredible businesses. Like, I don't know, some of my I love these tortilla chips, and we fund them, and like learning about their customer story, how they use us. And every time I eat the tortilla chips, I feel good about it, So there's a lot of that, and like really exciting businesses doing really cool stuff.
That is really fun. So how do you find that so we have Wayflyer's application basically built into Athena platform, right?
Yeah.
Like you're going straight to it from us. How do you find that kind of translates versus, the normal VC pitch anxiety that like I've worked with fundraising clients? It's a really stressful process, and you're going after sometimes even the same amount of money of 500K on either side.
Yeah. I think what's really cool about just like fintechs in general, and obviously our process that we've designed with Athena Collective around having a more seamless experience, is if you don't want to talk to someone, you kind of don't need to. Like, okay, unless you're taking like a couple of million from us, then you might get on a call. But like for like small amounts of money that you might just need to operate your business, like if for you that creates a lot of anxiety, and it's not a pitch, right? Like you don't need to pitch for the money. That's the difference. it's let your business do the talking for you, right? We ask for some connections. So if you're a D2C business, for example, your kind of Shopify or Amazon connector, your bank account via Plaid, and like the data does the telling of the story for you. And so it really does, it's not a personality contest. It's not about how you show up on that day in the room. It's really just about how your business is performing and what the growth trajectory is and how we can kind of forecast that. And so, positive momentum in the last few months is always a great thing because that like gives us a really great signal for the future. But I think what's so awesome is the fact that you don't have to have that sort of, panic of like a pitch deck or any of that stuff. Really it is just about getting the right visibility to be able to make a decision about financing. And when it doesn't work out, we'll give you that kind of visibility as well. So maybe it's not a never, it's just not right now, right? And just like, here are the couple things you might try, and then come back soon so that you can be eligible, I think, which is not something you often get, I think, in the equity world, right? It feels like a door closes, but I don't think that's always the case with us as well.
Well, I really like that, especially because like everyone talks about how VC for women is really hard to get your funding.
Yeah.
There's a lot of bias that exists.
Yeah.
But when you're operating on the data, you can't really put the bias in that personality aspect or any kind of preconceived notion someone has about a female founder. It just comes down to the facts.
Yeah, exactly. And I think I saw, like, we did some analysis recently, like a majority of our businesses are female owned, and that's not by design. And what I mean by that is like, we don't care. Like, we are not one way or the other screening for this, right? We're just screening on the business. And that just speaks to the performance of female founders. So that's why when you see these like crazy stats around the percentage of women who are funded, it's quite stark relative to what you end up seeing in a process which is pretty much blind to gender, right? And so I think it's great to see that is just the outcome, and that we didn't have to set up a specific fund or start like, attempting to target this, that it's just like these businesses speak for themselves and they've been successful. And so they've been funded by us. So that's really cool to see, as someone who, like I said, I used to do angel investing, working with female founders. And I've just been, the resilience like of the people that I've met and the founders I've met has just always amazed me. And the amount of times they get told no, but no really great reasons. And just the journey they've been on relative to some of their counterparts is, always amazed me.
I love that you guys don't have to be like performative about it. Like, you're not putting the effort in to say that like we're only doing female founders or we're going on this mission. It's just, you work with a lot of women-based companies, and it's just a fact of it that they do well.
Yeah. And by the way, I think there is a place for that, because obviously a lot of times if you don't create those types of funds or you don't start paying attention, like nothing changes. But it is so cool, like you said, that it just happened naturally in terms of how our business has been built and how our processes work. So I think there's obviously a place for it, and it's helped move the needle a little bit, I guess, in certain parts of the VC market. But it's great to see that outcome from us without really having to put much thought into that.
Yeah, I think that's really cool. How do you kind of see the data really unlocks all of these pieces for female founders, and how does that partnership really work with us?
Yeah, I think like what we said before around having that visibility into the company's performance and their trajectory really helps us make better decisions around their eligibility for financing. And really what we care about is like, can you repay, right? We don't want you to take on any financing if it's going to cause a strain on your business, if it's going to, make you overextend yourself. So we're trying to make like responsible decisions and also help them to make responsible decisions around, what capital they can really afford to take on. So I think having that data, also just having that you have these understanding of these companies and your ecosystem and working closely together, I think that really helps us to unlock the ability to hopefully offer them more money over time, better rates, more competitive, and just like really we always say like one of our internal values is being a co-founder to our customers, and like that's something we take to heart. And so I think also having that partnership with Athena Collective so we can learn more about that customer where you have a relationship is invaluable as well.
How do you guys build that into your platform and technology, that kind of co-founder aspect?
We have, so like the process that we have is like the second that you've taken a deal from us, we introduce you to a customer success rep. And that customer success rep is there to help you with any questions you have about your financing. But more than that is just to be there to be a sounding board. And so, for example, with like certain partnerships that we might have with others, we might say, okay, you're talking to your customer success rep, and you might want to ask them for advice around like, do you have a good marketing agency that we could work with? Because we're looking to kind of expand marketing, or potentially they're saying like, let's say they go into some financial hardship and you need some help to adjust for payments. Like that's the kind of thing that you would speak to your customer success rep about, but just generally just to have someone to lean on and ask questions to. I think in the same way that creating a community is really important to Athena Collective, it's trying to do that as well within the Wayflyer process. So I think that's what it looks like on the surface, but there's a lot more that happens around that, like just kind of opening the business and helping people however we can with any questions they have.
Do you find that for the more kind of niched founders who they know what they're doing in terms of their craft, but they maybe don't know what they're doing in finances, do you find this kind of co-founder CS rep really helps them kind of level up their financing skills?
Yeah, I think even from the sales process, like I think, sometimes the sales team, maybe it's the first time anyone's really looked at their balance sheet or P&L statement or their bank account. And it could be as simple. And we also have analytics built into our customer app where people can look at like, just to give an example, like maybe someone's never really looked closely at their customer acquisition costs. Like we have some of those calculations if we have the right data connections there. And that's something like our sales or CS team can walk people through. So they can see what we're looking at. So maybe we're just saying, you're performing really well, but like there's just the efficiency of it right now. If your marketing spend isn't quite there, right? And that's something that actually, like, in doing so, we've hopefully given them some help in a way that others haven't, right? Like, and just to be, really just a partner in their journey, because it's like, you don't know what you don't know. Like if you don't track something, you're never going to be able to improve it. If you don't even know people care about it, you're probably not tracking it. So I think through those conversations, hopefully those businesses are getting a clear understanding of what like financing providers might care about, maybe what equity providers care about down the line, because we also have a lot of companies that start with debt and then phase into equity when they get to like major kind of growth stage. So they bootstrap for a while, then they come and take financing to help them really grow and get to a scalable stage. And then let's say they have they want to go on a big hockey stick journey, and that's going to require a huge amount of investment. That at that point they might move towards equity, but hopefully by then we've been having conversations with them on how we view their business, and that's also going to be comparable to how maybe an investor would as well.
I really love that, because there's a lot in terms of that you spend on that you'd have no idea if you're spending too much on it, because you don't maybe have access to those benchmarks on what it should cost elsewhere. Yeah. Whereas you guys have all these different industries and companies working with you. You have like the best benchmarks for how much you should be spending at these stages.
Yeah, and we have those benchmark data in that customer app, so people can kind of see where they might compare relative to others in their industry. And I think that kind of visibility is something that's hard to get otherwise, but we have such a good vantage point, so it's really, really useful for them.
I love that. I've really been on like an education kick for founders recently. I've really been trying to push this of like, there's a lot of skills that you have to learn as a female founder, and there's a lot of things that you maybe don't have access to. So having partners like Wayflyer be able to pull some of this extra information in, I think is really valuable to our members.
Yeah, what have you found from speaking to a lot of the kind of founders that you deal with? Like, what are some of their major, I guess, anxieties around financing, or even not around financing, just generally when they're at the stage that they're at of starting the companies?
Yeah, I find that like ad spend is this thing people have gotten really like afraid of, because you hear the horror stories of someone spending like $20,000 a month on their ads and getting nothing out of it. And so there's this fear of like, do I even want to bother starting? How do I know if I could put something measurable into it? That's been a really interesting kind of find over the last year. And then, what do you do when you get financing? Where do you put the money? How do you know that you're using it in the right way?
Yeah. And it's so interesting on the ad spend, because that also changes over time, right? Like it's really that dynamic of what's happening in the market, like really impacts like the performance of your ad spend. So a certain time of year, you could see great performance, and then you go into the holidays and you're competing with a lot of other brands and a lot of other spend. And so it is really interesting just to, how do you get that context when you're new, and who do you ask? And maybe you don't want to go spend a ton of money on consultants or, analytics. So I think that is a real problem that probably a lot of people face when they're starting up.
Yeah, I think ads are such a tricky business, and figuring out how to utilize the capital that you have in a smart way, that's quite a steep learning curve. And I find it really interesting seeing how people are trying to solve that and put those pieces together.
And that is definitely why like marketing efficiency it matters to us, especially if it's a large percentage of someone's revenue, right? Like if they're spending a fraction of the revenue on marketing, it's not a huge proponent, like, or a component of our decision making. But if someone's spending like 20% of their revenue on marketing, then we look under the hood, and that's when we can coach people on and talk to about, what are the results of that, right? Like, are you seeing the benefit that you should be seeing from spending that much in that proportion of your revenue? And so I think, I'm definitely not an expert on ad spend. Like, I think there's a lot of people out there that are, but it's definitely something that you optimize over time. Like, I don't think people figure it out right away, and it's experimentation ultimately, right? So you just need to probably have that mindset, and do it in a measurable way, right? Like, so just thinking about it relative to whatever else you're spending and how that relates.
Yeah, I think one of the big things that like is really hard to grasp is learning that return on investment. Really figuring
Yeah.
out, is the money I'm putting in return, like, am I getting something out of it, and is it
Yeah.
worth what we're putting in?
Yeah.
I find that to be a really hard challenge for a lot of people.
Yeah, and I think like at the earliest stages of businesses, it is a finger in the air. Like, I don't think you can expect at super early stage, like, you're gonna have to put together some sort of forecast. Of course, everyone does, but like, it is really just a scenario plan that you're hoping for, or that you don't really know what it has in store for you. But I think it is important to, like, even just asking the questions and kind of being honest about the results when you're trying things. If it doesn't work, pivoting, like that's all really important probably at that stage. But yeah, I think sweating too much about, like, I have to know exactly what's going to happen when I try this it's going to be kind of paralysis for a lot of founders, because you just kind of have to go with intuition at some points when you don't have enough data to make decisions. But it is true that there are, like, playbooks out there, and like where those exist, like surfacing those to founders. And I'm sure that's something that happens in your community is so useful, right? Because you don't want to have to repeat mistakes that others have made if you don't have to. But every business is slightly different.
Yeah, pulling those playbooks has definitely proved to be like a really great way to at least give someone a starting ground. Because you're right, like a lot
Exactly.
of it in those early days is that intuition, but if you've never been through it, you don't have it yet. So you're kind of working off of other people's intuition, and getting that
Exactly.
surface is really difficult.
Yeah, you've got like none of that pattern recognition, which like starts to build confidence, I think, when you get it of, I've seen this before, I've seen it not work, or I've seen it work. And then that allows you to kind of lean in or decide whether or not you need to rethink a strategy. So I think that's totally true.
When you look at kind of how companies are growing and scaling with Wayflyer's financing, what do you guys find that most founders try and unlock once they kind of get financing from you guys?
So I think as I mentioned, in the kind of e-commerce space, it's often inventory. Like, that's a huge one, of just like having enough products to sell to be able to generate revenue. I think another large one is, like I said, marketing. That is, ad spend is a huge one, right? Because especially if you kind of have nailed and figured out, like, if I spend this much on ads, this is what the return on that investment will be. Then every extra dollar you can get, assuming it's, efficient and your cost to acquire is lower than the amount you're going to make on that customer, like, it makes sense to usually to spend that money. And so that tends to be a big one. But sometimes it's things as diverse as, like, payroll, or, like, I don't know, supplies for new office. Like, it can be anything, to be honest. But like I said, like, it tends to be a really good product for that working capital cash flow gap. So, like, another example is businesses that might, let's say, like service-based businesses that do invoicing and only get paid monthly. So they technically should be accruing that payment as they go. So they've done a service, but maybe they're on a marketplace, and that marketplace doesn't pay out until the end of the month. That's another really great use case of, you need to go buy more supplies, or you need to pay for your transport and all this other stuff, but you're not getting your revenue until the end of the month. So it's really good for those sort of mismatches in timing, which tend to happen around, especially when there's invoicing involved, or kind of third parties or vendors that you're waiting on payments from. So yeah, there's just a couple to give an example, but it can be really diverse.
The bridge I really like. I don't know that that's a use case I would have even thought of just like getting you to the end of the month.
Yeah, yeah. And it's like, and maybe you want to grow this month. So maybe you have enough to, like, for subsistence, but you're gonna have this huge payout at the end of the month. And so but you want to invest now. You need to hire more staff. You need to, I don't know, open a new office, spend money on advertising. It's that kind of thing where, and that makes a really good customer for Wayflyer, right? Because we both have that visibility and both have that certainty on what's coming. We just know it's a matter of time. But in the interim, it means that you're in a place where you have to spend the money. And that's why I kind of use that kind of being starting to sell to wholesale and starting to go into a market or something, because it's a good example of how that cash flow gap can happen, because oftentimes it's like 90-day payment terms. So like you are spending a ton of money to manufacture the product, ship the product, get it to the retailer, and then after they're sold, you might only get paid after 90 days. And that is this huge amount of time where a business is sort of left in the lurch and isn't able to then invest in the next set of products. So there's kind of versions of that in non-e-com space, like I mentioned, probably around invoicing and others. But it's really as diverse as businesses are. That's kind of the use cases can be as well.
Wow, yeah, I really love that. That's I think for a lot of our members, like that's a thing that you're always kind of left wondering is like, how do I grow if I don't have anything in the bank right now?
Yeah.
And I'm waiting on clients. Like maybe I'm doing well, but we could be
Exactly.
hitting that next level.
Yeah.
And you start getting those ideas, but you just don't know how to get to there.
Yeah, and like with like SaaS, for example, maybe you bill quarterly. Like that's another example, right? And you have, or you've got like a couple of partners in the pipeline. A bunch of those deals are going to close, but not all of them. But you've got some visibility that your revenue will be higher, but there's going to be this time lag, and so it's assuming you're demonstrating that consistent, efficient growth, like capital can be a really great plug for those types of gaps. And that's the converse to equity, which is like equity is like, I want to build a completely new product. I have no strong, analysis or experience or performance so far where I can say it's going to work out. But if I don't spend the money, if I don't shoot for the moon, like I'll never hit the moon. And so that's where equity is really useful, because that's the type of risk they're getting paid for, right? Like that 5 million they make from that, 500K investment is like, the point of that is really the idea that you were shooting for the moon, and if you hit it, then they get really paid. And so, yeah, it is just trying to think about, I think for any founders listening, it's really thinking about why am I needing capital, right? Is it an operational cash flow problem, or am I about to take a massive gamble and it's going to require a ton of headcount and a ton of just kind of faith in that this will work, in which case like equity is still really a solid option for that.
Do you find in like kind of the tides of right now, which is everyone's talking about the shift into operational efficiencies because of AI, that like more founders might tend towards this debt financing instead of going to VC for some of, honestly, even some of these smaller moonshots that you could do?
Yeah, I mean, I think it really just comes down to how you're able to operate the business and how quick, like, can you bootstrap it, right, and get it off the ground. But then I do think there is really value, like I said, in equity for certain use cases where you want to 10x your team, right? That's a really strong use case. So I think it will still depend on the business need, but definitely interesting to see how AI is interacting with this space and how it's going to impact founders. Like I know we've had a number of customers recently tell us like they found us on ChatGPT. So we didn't even know that was like, it's cool that we're getting recommended by Chat without having to like really plug that at all. But I think it is just interesting to see kind of, how that's going to change the impact that founders have, like just the impact on founders' decision making, and then also, like you said, around that operational efficiency and whether or not that means they're running leaner teams, and that means they need less funds to grow in the early stages, and maybe they do want to get to some certain stage without taking VC money, and then for that hockey stick growth, really taking funding. Then I could definitely see that path being a viable one.
Yeah, I'm almost wondering if like we're going to see a trend towards someone staying in kind of these alternative funding groups longer, at least.
Yeah.
So because they can just make it further on leaner teams.
Yeah, I think that's definitely the case. I definitely think it's worth noting that look at the fine print, like just think about the financing you're taking, because like something we pride ourselves on is like we've got no personal guarantees, but that isn't the case like with a lot of bank funding, with a lot of other like kind of alternative financing. And so you just want to make sure like what you're signing up for and what the really what your contract says. That's the one thing. And like, this is where leaning on a support network to people who might be familiar, obviously using AI to help you understand these contracts. But that's just the one thing I would say is that it's in the same care you would take in taking equity and trying to understand the terms of those arrangements. I would still approach alternative financing and fintech lenders with that same sort of just like kind of analytical lens of what am I actually signing on to here.
Okay, so I want to like double click on that for a minute of like Wayflyer's got the no personal guarantees. What are some of your other kind of true wins of going with Wayflyer over some of your other options?
Yeah, I mean, so we just charge a fixed fee, so it's not APR based pricing, so there's no kind of late fees, and like obviously we work with people when they get into financial trouble and need to kind of rearrange repayments. I think also we've got a couple of different product options. So for some customers, they really like revenue based financing, and for those that kind of don't know what that is, it means we'll take a percentage of your daily, weekly, or biweekly sales. So for example, we'll agree, okay, we take 5 or 10% of your weekly sales, and that's how you repay back the financing. And that's the way those structures work. And what's really great for that is for certain founders, they like that if they have a down week, they're not paying as much. They're not paying back as much, right? Because you're paying a percentage of your revenue. So if you have a lower week than last week, you're not going to be crippled by the fact that if your sales half this week, you're now paying 50% of your revenue to repay this loan or this capital offering. So that's what people like about revenue-based financing. It's not great for all companies. Some who are like, every week I'm like tripling my growth, so I can't even know what that's going to look like. They might choose to kind of have a cap on that percentage, daily sales or weekly sales, or they might kind of go like a fixed term type loan direction. But I think just having those options is also really good because for I guess some of our competitors in the space, like they don't have that optionality around maybe making a fixed loan versus a revenue-based financing. And so for those really quickly growing businesses who don't want to repay quickly, then that might not be a great option. So I think that's definitely a huge win. But I genuinely think like that co-founder to our customers is something like having someone to talk to, it being really a personalized experience, really understanding your needs and your use cases and just trying to kind of really be there. Like it's really exciting to see some of the companies and where they've got to now versus like where we started with them. And I'll send you over some of the videos, Mikayla, because it's really fun to watch, but it is really cool. And I think that is definitely a benefit of working with us.
Yeah, I think honestly, like more vendors need to be partners with their
Yeah.
customers, like approaching it as like a partnership in every kind of avenue. I feel like you end up getting such a better support system as a founder because of that.
Exactly. And I don't know how you can really understand if you don't understand your customers' needs, how can you help solve them, right? And ultimately, like that is our mission, right? Is just to really help them grow and like really unlock the potential that they have, and doing it in a way in which they have a partner along that side for that journey. So I definitely think not treating them like partners is kind of a mistake in just from every sense.
Perfect. What is your favorite thing about being on that team?
Oh, it's a good question. Can I say two things? That's kind of
Yeah.
cheating, but I'll say two. One is the people, because like no matter where you work, the people make a job. And for me, it's so exciting to see everyone so aligned to the same mission. And I actually think, and this is the second thing, is just like the mission. I don't think we talk about the mission enough at Wayflyer. Like it just doesn't, there's a lot of sort of a lot of businesses that really lead with their mission of being really like having great social impact and like really great impact on the community. I think we don't do that enough. And I think it's so evident though that everyone working there has that same customer obsession and same vision of trying to help our customers grow. And so it's a mixture of the people and just like the energy they bring to the work and just the kindness of the people. And then I think it's also the fact that we're all aligned and running towards like the same goals, which is like helping our customers just build cool businesses and build them quicker and build them more efficiently and with less stress, right? And so that is definitely like the thing that drives a lot of other people, and it's actually why I get to be excited talking about what I do and what we do. Does that kind of answer the question? Hopefully, sorry to
Yeah,
give
I
you
love
two, not
that.
one. How about you
No,
with
I think that
Athena?
is
Can
perfect.
I throw it back at you with Athena Collective and ask you what your favorite thing is?
So like my career before this, it was consulting, and I got to work with so many female founders, and I got to see so many of them stressed and like not having a bunch of resources, and being able to build a platform that is your bench as a female founder to give you access to any type of partnership you could need to be able to basically I get to champion over 600 different female founders right now,
Wow,
and
that's
I get
amazing.
to hear all of them in the Slack groups, talk about their wins, and we get to see in the community on the platform and in these channels when people are learning skills, they get to talk about how it impacted them. So we built in like reflections into our learning pieces that you can make public, so that you can
Cool.
share with others of like, yeah, okay, I read this article, but here's what I did with it. And
Yeah.
like putting those action pieces in, and then I just get to go and scroll through and like see what people are talking about. It's so fun.
Yeah.
And I don't know that I ever saw my career being in this point where I'm basically just like a cheerleader and I'm
Yeah.
just building the platform for everyone else to be able to go and do such great things. It's so fun.
That sounds very gratifying. And just like probably having to have sat there on the sidelines and not always being able to help solve problems, and also not having any other resources to kind of help your clients in consulting like solve their own problems, right? And that's what's so cool, it sounds like, about what you're building, is just trying to take every win and make sure it's like, magnified so that everyone can learn from each other. I think that's amazing. And I think it's something that, I'm sure my mom would have loved when she started her business in the 80s, like just how to navigate different situations. Yeah, that's amazing.
Yeah, I think that, and then, making the founder journey so much less lonely.
Yeah.
Like everyone has always talking about how they're just so alone. And
Yeah.
you don't have to be. And I think it's really interesting how, in this very remote world that we've been living in since the pandemic, finding new and innovative ways to bring people together to feel a
Yeah.
little less lonely when they're taking these big bets on themselves.
Yeah, and also probably helps out with burnout, right? Like founder burnout is real, and it's probably a great way to help people. Yeah, like you said, when you feel a little bit less alone, when you feel supported, when you have someone to turn to, it's probably just, it makes it feel that much less stressful every day, and it probably helps you just, look at it as an obstacle rather than like an ending, right? And continue to move forward.
Yeah, I'm really aiming towards continuing to bring together, like, yes, you want the other founders around here to support you, but having those partners who are championing you
Yeah,
on specific initiatives where they've got that education, they've got that skill set and expertise behind them, and they can
yeah.
come in and tell you you are in fact doing something right, even if it may not feel like it.
Exactly. I think that would be a huge win for so many of the founders on Athena Collective.
Yeah. I almost want to like take your guys' like co-founder model and just go tell everyone like please just do this.
Yeah,
Like this is
yeah.
what everyone needs.
Yeah, exactly. Well, maybe part of our secret sauce, but it's
Yeah.
definitely something that we hold true. No, I mean, I think it's like I said, it's like we've built it into kind of our ethos over time. So we kind of, when we hire people, we think about how they're going to be co-founders to our customer, and constantly just, yeah, I think it kind of radiates top to bottom, bottom to top in the whole work. But yeah, I don't think you can be successful if you don't do that as a business.
Yeah, I think everyone needs their champions behind them to really feel
Yeah,
like they're
exactly.
they're hitting those goals, and honestly even to feel like they can tackle bigger ones. Because I think that confidence is a really big issue, especially in female founders of can I even try to go for some of these growth goals or should I just stay with what's working?
Yeah.
And so I'm really proud of the fact that Athena is really aiming towards encouraging that confidence in our female founders so that then maybe they do like feel like taking some financing to take some bigger bets.
Yeah, I love it. Bigger bets is always the way. I mean,
Yeah.
obviously with caution, with I'm just not gonna say everyone go take a ton of financing, but that's the point. Is like we're not gonna like give someone financing if we think they're gonna overextend. So it's also just doing it responsibly. But you have to kind of set your sights high if you want to hit them, and so definitely taking capital at the right time can really help accelerate your journey and trying to hit your goals.
And when founders like come to you guys and start to take some of those financing and they maybe come to you with some of these ideas of what to do with it, do you guys work with them to kind of help figure out, where to start and what to do in that order?
I think it's just depending on, like some customers come and they have an exact idea of what they want to use their funds on. And I think for others, like that's a perfect conversation to have with the customer success rep, especially if they're thinking towards, I need more financing next time because I want to keep growing quickly. Like what have others done? So I think it really is case by case. And it's something that we hope to continue to support people with. And obviously we have we're trying to do more kind of blog content and just telling these stories of others so that people kind of have a model of what works and what doesn't. But ultimately, like each business is unique, but there are obviously some similarities across industries and business types. So that's where the customer success reps have so much context from all the other customers they support that it's really easy to help coach people on that journey.
Well, and you guys can basically give out like recommended reading of like, hey, go watch this guy's story
Yeah,
because
yeah.
it's going to be really applicable for you and you might find some inspiration in it.
And I definitely think there's like certain partners we work with where where like this person's like main problem is they can't figure out like, which of their product lines are not profitable and they don't have a scalable way to do that. And we're like, great, we actually have a partner we work with that is literally their bread and butter, right? And they've helped others kind of get from unprofitable to profitable when it's just like a tweak of kind of product spend and inventory and those sorts of things. So it is also like we're trying to build out our partner ecosystem to help do that more, because we'll then have this kind of really great vision of how to connect the dots for people when they have certain gaps in their processes or in their business strategy.
Oh, I love that. Everything about Wayflyer's mission is actually just like so fun, and I'm learning so much because I did not know you guys like championed and like cheerleaded this much, but it makes sense given what your guys' business model is.
Yeah, exactly. And like I said, some clients probably come to us and are like, I know exactly what I want to do. I don't need to speak to you until I need more funding. And like, that's fine too. But it just depends on the level of, interaction the customer wants. And then we will be there if they need us.
Yeah, I mean, it's always good to just have someone on standby of you can call if you need to, because that was the biggest problem I saw when I was consulting, is that most female founders just didn't even have anyone to call if they needed help.
Yeah. I mean, that doesn't surprise me, unfortunately, like sadly, and I'm glad they now do.
Yeah. Well, I think that should cover us for today. Thank you so much for joining today, Emma. This has been a fantastic conversation.
I learned a lot too about Athena Collective. I'm really excited to continue the partnership, and hopefully we can help some more female founders together.
Thanks so much, Emma. I hope you have a lovely day. And I think we are going to champion all these female founders right to their finish line.
I'll be there. I will be there until the end.
Love it.
Thanks for listening to the 4 Female Founders podcast series. If you enjoyed this episode, please go ahead and hit subscribe, like, or comment below so we can continue to support women in business by helping them thrive, not just survive. We'll see you on the next show.